5 seconds to the open.
Ready?
Who wants to get this thing started right about now?
Welcome to Follow the Money Weekly with your host, Jerry Robinson.
Welcome.
Not just some guru.
Oh, really?
Your host is an economist and a best-selling author.
What an interesting news item. I'd better write that down.
And just someone who likes to make money and help you to make money. Welcome to Follow the Money Weekly. And here he is, Jerry Robinson.
Friends, welcome to you all around the world. Welcome to the Follow the Money podcast. My name is Jerry Robinson. I'm your guide through the fascinating and sometimes unpredictable world of finance and economics. And I'm excited to dive into today's episode because we have some big topics on the table today. And you'll know what I mean if you've been keeping an eye on Bitcoin lately. The world's largest cryptocurrency just hit a new all-time high, over $75,000 in the wake of the recent U.S. presidential election, where we saw a sweeping victory for Republicans and a return to the White House for former President Donald Trump. With Bitcoin rising and hitting new records, and with a new administration in place, we're looking at what could be a pivotal moment for the cryptocurrency market and the broader economy. And so in today's episode, we're going to break this down in three key segments. We're going to start off by talking about Bitcoin's recent breakout to a new all-time high. We'll talk about why Bitcoin is on the move. We'll look at the potential implications of Trump's pro-crypto stance. He certainly made no secret of his support for Bitcoin, even hinting at creating a Bitcoin strategic reserve and positioning the U.S. as the crypto capital of the world. We'll dive into what all of that could mean for the future of crypto in America and beyond. And then in segment 2, we'll shift gears and talk about the Federal Reserve's upcoming policy meeting, which is set for Thursday. There's a whole lot riding on that meeting, and it's happening in an environment where the U.S. dollar and Treasury yields are both on the rise. We'll take a look at what's driving those trends and how the Fed's upcoming rate cut could impact everything from stocks and bonds and, you guessed it, Bitcoin. And finally, in segment 3, we'll wrap things up with some of my concluding thoughts and provide a final word for all of you who are following these markets closely. Whether you're a Bitcoin investor or just someone who is curious about what's next, you're in the right place. So settle in and let's dive deep into this moment where finance, politics, and technology are colliding in powerful ways. We've got a lot to cover, so let's get started. All right, so today we're looking at Bitcoin's fresh record high as the world's largest digital currency has soared past $75,000, which is an achievement that's been fueled by both market excitement and what many see as a potential pivot point for cryptocurrency in the U.S. Now, if you've been following Bitcoin's story with us over the last decade or so, you know that every time we hit a record high, it tends to be a signal or a marker of broader shifts that are happening across the country and across the economy. And this time, the backdrop for Bitcoin's surge to a record high is unmistakably political, with the 2024 U.S. presidential election acting as the catalyst for this recent price spike. In fact, last night, as I was watching the presidential election results come in from around the country, I spent some time just opening up my computer and I was looking at the price of Bitcoin. To me, that was telling me a lot about what the market was expecting from the election. And during that time, we were seeing Bitcoin begin to slowly creep higher as the results began to come in. And this is because the world is watching as former President Donald Trump, who was reelected, is bringing a pro-crypto agenda that promises big things for Bitcoin. And as the night progressed, we began to see Bitcoin rise as high as $75,000, which represented a nearly 10% increase in just 24 hours. And again, that was fueled by these early indications of Trump's election victory and his promises to drive a favorable regulatory environment for the cryptocurrency space. Now, prior to this recent breakout, Bitcoin's previous all-time high was just around $73,800. That was hit back in March. And it wasn't just Bitcoin that was on the move last night and even into this morning. What we saw also was Ethereum, the second largest digital currency in the world. It jumped over about 7% during the time I was watching it. Other altcoins as well began to rally as we began to see this broader optimism take hold across the crypto space. But it wasn't just cryptocurrencies that were on the move. Even stocks connected to cryptocurrency began to see a boost. Coinbase, for example, was up 20% on Wednesday morning. Bitcoin mining stocks like Marathon Digital, Bit Digital, and many others are seeing double-digit gains in the wake of the election. Even as I record this morning on Wednesday, the 6th of November, I see that our top-ranked Smart Score Bitcoin mining stock, Cipher Mining, is up around 22%. So we're seeing a broad rally across the cryptocurrency space and even in the financial payment space as well, with stocks like Visa up around 4% this morning. Some of the top analysts in the cryptocurrency space, such as those from Bernstein and also Van Eck, have quickly adjusted their forecasts as well based upon this new information. Some of them now expecting Bitcoin will hit $100,000 by the end of the year and even reach over $200,000 by 2025. Those used to be pretty wild predictions that many people kind of sneered at. But today, they seem grounded in some realistic analysis of market conditions. And when we look at what Trump's presidency could be bringing to the crypto market, it could be game-changing. It could not be. We don't know what's really going to happen. Whether he will actually implement the promises he's made around cryptocurrency remains to be seen. But what we do know was that for years, Donald Trump was a crypto skeptic. He used to talk about how Bitcoin was not a good thing and that it was attacking the US dollar, or ultimately it would seek to erode the US dollar. But today, that's all changed. His new administration has a clearly articulated goal of making the U.S. the quote-unquote crypto capital of the world. So Mr. Trump has gone very, very far from where he was in the past, where he was basically a skeptic or even a critic of Bitcoin, where today he's talking about not just accepting or tolerating Bitcoin, he's talking about establishing the U.S. as a global leader in crypto innovation. One of the most notable ideas that has come out of the Trump administration as he ramps up and prepares to move back into the White House is a proposal to create a strategic Bitcoin reserve. Now, that's really quite stunning when you think about it. It's really unprecedented. Basically, what this would mean is that the United States would create a national Bitcoin reserve where the U.S. government itself would hold Bitcoin as part of its strategic assets, similar to like gold reserves. Now, if that's actually implemented, that's going to be a monumental shift. That's going to position Bitcoin as not just a hedge against inflation, but also as a core part of America's financial strategy. Think about the finite nature of Bitcoin, and if America itself, the government, the federal government, begins hoarding Bitcoin to create some sort of strategic reserve, well, then you're talking about a strong amount of demand being placed upon that very small finite supply, which is already being eroded through things like Bitcoin ETFs and other countries and even pension funds and endowment funds that are beginning to tune into the idea of holding a portion of their cash or their cash equivalents in things like Bitcoin. I mean, there's only just so much to go around, with the 21 million cap on Bitcoin itself. On top of that, you have the Trump's administration basically pledging to revisit and potentially revise cryptocurrency regulations, especially and perhaps specifically by addressing the leadership at regulatory bodies like the SEC, right? The Securities and Exchange Commission. For those who've been following the space closely, the SEC has been highly antagonistic towards cryptocurrency, especially under the current leadership of Gary Gensler, which is so ironic in many ways because Gary Gensler for many years taught about Bitcoin and was an early, I would say even appeared to be an advocate for Bitcoin early on, teaching at MIT. But once he got into his position at the SEC, things really began to change, and the SEC began to use litigation as a means of regulation. And there was not very much in the way of clear regulations for many of these companies. So the Trump administration signaling that a shakeup is coming, which could mean a lighter regulatory touch on the digital asset class itself, and also potentially make some more room for growth in the crypto sector by not having such a heavy hand in terms of regulations. What was interesting to see during the actual campaign before the election was that Trump's crypto-friendly stance really began to force his opponents, including Kamala Harris, to consider pro-crypto policies. Even President Biden began to soften his tone towards cryptocurrency after Trump began his crypto-friendly stance. Essentially, what we've begun to see is that cryptocurrency is becoming a bipartisan issue. That's a very rare phenomenon, as you well know, in today's polarized political landscape. And this is causing, I think, more capital to flow in from the sidelines into the crypto space, perhaps faster than we've seen in a long time. These investors aren't just hoping for gains, they're practically expecting them. I mean, if you look at, again, analysts from, say, Bernstein, they went from predicting Bitcoin could hit 80 to 90,000 by inauguration day in January if Trump's policies remain crypto positive. And again, their longer term projection has Bitcoin potentially hitting north of $200,000 by 2025. Now, what's behind those projections that these analysts are putting out? Well, they're based on a few key factors. And number one is the continued growth of the spot Bitcoin ETFs, right? Those are attracting substantial institutional investment. We're seeing endowments, we're seeing pension funds, we're seeing other types of institutional players buying these spot Bitcoin ETFs, as well as the retail investor who is looking to, make profits from a rise in Bitcoin. So that's certainly been creating an escalating demand for Bitcoin in that environment due to those spot Bitcoin ETFs. We've also seen that Bitcoin's price historically surges after U.S. elections. We saw that in 2016, we saw it in 2020, although with some diminishing returns. Let's go back to 2012, for example. Bitcoin then surged over 12,000% in the year following the election. Well, of course, that came along with the halving, right? So that was part of the halving cycle, but it also coincided with the election cycle. Then in 2016, we saw Bitcoin spike around 3,600%. And then in 2020, we saw it rally nearly 500% within a year. And so again, this has analysts expecting that if this trend continues, guys like the analysts over at CoinDesk, for example, I'm thinking of James Van Straten, who recently suggested we could see a 48, 49, 50% rally post-election, putting Bitcoin around 100,000 in Q4 of this year. I just can't tell you how much things have changed over the years. And if you've been an investor in the Bitcoin space for many years like we have, then you have certainly seen it. I think back about how this asset class was very, very little known and very few people were really talking about it. And now we see that we are beginning to see Bitcoin's acceptance as a legitimate store of value and as a hedge against inflation, right? We've been talking about this, again, for years, and now we're seeing it reflected in institutional investment strategies and even in political agendas. You have major asset management firms that are entering the crypto space. You have spot ETFs that provide accessible ways for traditional investors to get exposure to Bitcoin without having to have a hardware wallet or without even having to directly purchase Bitcoin. But what also has many of these institutional investors so excited, I think, about Bitcoin and going forward with its price has to do with the Trump administration's policies towards economic growth through deregulation and aggressive market expansion. So basically for Bitcoin, this means fewer regulatory hurdles, right? A clearer path for innovation and institutional adoption. So the hope is that a new Trump administration will reduce SEC restrictions so as to lead to an environment where crypto innovation can flourish without as many regulatory barriers. And that's important because in the past, we've seen that when you have clarity on regulations or regulatory clarity, that often leads to an influx of fresh capital. And of course, America is the largest economy on the planet. And so investors worldwide are closely watching how the U.S. is going to navigate its own crypto policies under a Trump administration. And I think there's a belief, at least from what I've seen, that if the U.S. fully embraces Bitcoin, then we're going to see other major economies basically forced to follow suit to remain competitive in the new digital asset economy. So to sum it up, we're at a very pivotal moment for Bitcoin, not just because we're seeing a fresh record high, but because the macro level support it's garnering from the political and economic spheres are just simply off the charts. Bitcoin is no longer just an asset held by early adopters, right? It's now on the radar of some of the most influential policymakers and institutional investors worldwide. And it's a huge if, but if the Trump administration actually follows through on its promises, then we could be witnessing the start of a new chapter for Bitcoin, one that legitimizes that digital currency on the global stage. This is why I think, despite the fact that we have the ongoing volatility in the crypto space, I believe the current momentum suggests that Bitcoin's growth story is far from over. Now, I'm a longtime advocate and early adopter of Bitcoin. I believe personally this is a pivotal moment for the crypto market. You have this combination of supportive policies, you have this increasing institutional interest. All of that bodes well for future price increases for Bitcoin. So for those and many other reasons, I maintain my projection that Bitcoin could exceed the $200,000 level by the fall of 2025. In fact, the number that I've put on it is $275,000 as a price target to be reached, I would assume about a year from now, maybe a little less, sometime by September, October of 2025, based upon our cycle work. Now, that $275,000 price target, we may not hit it. We may come in below. We may blow past it, right? But we maintain that projection. We've held that projection now for several years with a 2025 price target of $275,000. And that outlook is based not just on the potential for broader adoption of cryptocurrencies, it's also based upon the current trends and the current cycle that we're in. So we have increasing institutional adoption. We have numerous innovative use cases with Bitcoin and other cryptocurrencies. We have a finite supply for sure with Bitcoin. Therefore, I believe Bitcoin is well positioned to not just exceed $100,000 by the end of the year, but move on again to a much higher place by the end of next year before it finally peaks out and begins its new bear market, which it tends to do, in a 4-year cycle. If you're not a Bitcoin investor out there, but you want to learn more, we've produced a lot of great podcast episodes over the years. I encourage you to go back into our archive and listen to some of them. In fact, one of the ones we put out at the beginning of 2023 was called The Bitcoin Boom. That was one of the last, big episodes we did on Bitcoin. We've done others, but that's one of the ones that I'm thinking of right now, that just as Bitcoin was beginning to come out of that funk in 2022, we had that episode, but there's many, many more. And those episodes go way, way back. We've been talking about this topic for well over a decade. But here we are. Bitcoin is booming, and the potential for regulatory and policy shifts are on the horizon. There is no doubt we are in for an exciting journey. Hey friends, Jerry Robinson here, followthemoney.com. Now before we jump into our next segment, I've got something exciting to share with you. If you've ever thought about improving your day trading skills, or maybe you've been curious about how to navigate those fast-moving markets, I want to invite you to join our brand new 30-minute Breakout Blueprint day trading course. This is the very strategy that I've spent many, many years perfecting. And whether you're already a day trader or just looking to sharpen your skills, this course could be exactly what you need to up your game. And here's the best part. For a limited time, you can save 15% on your membership here at Follow the Money and get access to this course and all of our other courses by going to followthemoney.com and simply using coupon code JUMPIN15 at checkout. That's JUMP as in JUMPIN15. Jump in 15. Enter that coupon code to save on any of our memberships and gain access to our tools and strategies and courses and insights, all the things we have to offer here. What are you waiting for? Head over to followthemoney.com. Take the first step towards mastering the markets with our new 30-minute Breakout Blueprint course coming up. It starts this Tuesday, October the 15th. And trust me, this is one opportunity you don't want to miss.
Welcome back to Follow the Money Weekly. And here's Jerry Robinson.
All right, friends, welcome back to the Follow the Money podcast, one of the longest running personal finance podcasts on the web. Well, let's dig into our next segment where we're going to focus on the Federal Reserve's upcoming policy meeting that's scheduled for Thursday. Kind of a shakeup this week in the meeting because normally you'll get a Tuesday, Wednesday meeting for the Federal Reserve, the FOMC meeting, and then they announce their policy on Wednesday. Well, because of the presidential election on Tuesday, they bump back the meeting to Wednesday and Thursday. So the policy announcement comes out this Thursday. And right now, the market has priced in a 99% probability that the Fed is going to cut interest rates by another 25 basis points. Now, the last time they cut, it was a 50 basis point cut. This time by 25 basis points. That would bring down the target range to about 4.5 to 4.75. And then if you look out to the December meeting, there's another 66% probability of another 25 basis point rate cut at that December meeting. So we're looking at a clear expectation of easing throughout the end of the year. Now, why are these rate cuts so significant? Well, obviously, when you cut rates, it lowers the cost of borrowing for consumers and businesses, and that obviously could spur on spending and investment. That's what, at least the Fed is hoping. And they also make yields on things like bonds less attractive, which typically leads to a shift in assets. You'll typically see lower rates reduce the appeal of fixed income investments, and that tends to push capital towards equities, stocks or other assets with higher returns. And that, of course, is coinciding right now with the sell in May and go away crowd that comes back in November. That old adage, sell in May and go away. Well, that, the people who follow that adage will return to the market back, they return in November. So November is when they come back into the market. They stay until May, which they consider the best 6 months of the market. November to May, actually, historically it is. And then they get out in May. So that crowd that left in May is now coming back, just as rates are coming down. So it is kind of a nice, perfect storm there for asset prices to rise in this environment as rates begin to come down. Of course, cutting rates could also support the economy by making borrowing cheaper, but there's always the risk that the Fed is going to overstimulate the economy and then reignite those inflationary pressures that they've worked so hard to get under control. Now, one of the major markets that we follow here at Follow the Money is the U.S. dollar, that U.S. dollar index, which affects everything. When you look at a chart of the dollar, you'll see that we did peak out back in 2022, back in the fall. It's been a couple of years now since we hit that peak on the U.S. dollar index. And now we've been kind of grinding sideways between the 100 level on the U.S. dollar index and say 106 or so, somewhere in that range. We're just kind of bouncing back and forth, but mainly on the lower end of that range lately. We did see a really big rally in the dollar in October. And that was actually the biggest monthly rally that we've seen in the U.S. dollar over the last 2 years. And that resiliency was somewhat surprising because it came after the Fed's first rate cut of this whole cycle. And so typically when the Fed cuts rates, you say, well, the rates are supposed to go down, right? But instead, in this case, they went up along with the U.S. dollar. And so we've seen the dollar rally on the back of the recent election results as well. So when we learned that Trump had won the 2024 election last night, we saw the U.S. dollar just really take off. In fact, today, as I record this, I've seen the value of the dollar index go up from about 103.40 all the way up to about 105.40. So it moved like 2 points in a single day, which is pretty big, for a currency like the dollar. You don't really tend to see those kinds of moves. It looks like it's backing off some of its highs now. And we don't expect that the dollar is going to go up too much higher here. This really is kind of a reaction to Republicans, taking back the White House. I think investors are basically interpreting these results as a potential for pro-growth policies, and that's part of what's keeping the dollar elevated here. Typically, as I said, when the Fed cuts rates, you expect to see the dollar weaken because lower interest rates reduce the yield on U.S. assets, and that makes them less attractive to foreign investors. But in this case, the political landscape is playing kind of an outsized role. There is some optimism in the market about a Trump-led administration that's offsetting the typical downward pressure on the dollar that rate cuts might bring. So we have this interesting dynamic where the dollar is holding up despite the expectation for rate cuts. And like I said, we've also seen Treasury yields ticking up, which again is somewhat counterintuitive given that the Fed is expected to cut rates. And they are cutting rates. They're in the middle of a rate cutting cycle. Yields have been rising largely because of investor uncertainty around the election and the fiscal policies that might come out of whichever administration. And I think the Republican-led government now, which often leads to lower taxes and potentially higher spending, both of these can lead to increased borrowing. And I think that's what's on the minds of investors. Anybody who has been invested in bonds over the last couple of months has seen a lot. I mean, if you've been invested over the last few years, you've certainly seen some shocking things. But just even over the last few months, the fixed income market has been very interesting to see. Rising yields usually means that bond prices are falling, and that's really what we've seen. We've seen bond prices falling along with Fed rate cuts, right? And that's just a little, as I mentioned, a little counterintuitive. But it's also because we have this political dynamic that's going on, and we're getting ready to see a shift in the overall economic approach here in the U.S. And so what does that all mean for investors? Well, if you're holding cash, then obviously you might be looking to deploy that cash somewhere. And I'm of the opinion that we're going to see asset prices continue to move higher into 2025, mostly. I think the current resilience in the dollar index continues to be a temporary phenomenon, especially as the Fed's rate cuts continue, not just this year, but into next year. I mean, the Fed is expecting also right now, the probability is for a 1% cut to interest rates throughout 2025. So that would bring the effective Fed funds rate down to about 3.4% by the end of the year. And so, we're certainly on the move towards lower rates, and that should also be impacting, that should slowly begin to dawn on the broader market. And we should see those bonds prices begin to rise as yields begin to stabilize and come back down. And that same thing portends for the U.S. dollar. Now, if you're a stock investor out there, lower rates are obviously good news. They reduce the cost of financing for companies. They tend to make stocks more attractive relative to bonds. And for that reason, we do think that stocks are going to have another great year as we head into 2025. Now that we have some clarity on who has won the 2024 election, that uncertainty is going to largely dissipate for investors. And I think that's really going to create this trajectory higher for, stocks, cryptocurrencies, and quite frankly, I think gold as well, because even as the Fed begins to cut rates, there is the concern, and I've been saying this now for a little bit, I do have a concern that we are going to see the credit rating agencies issue a downgrade on the U.S. government, credit rating. And the reason is, of course, is because both administrations, both campaigns, the Harris campaign and the Trump campaign, both were making outlandish promises about how they were going to spend, but there really wasn't any information about how they were going to raise, money to pay for it. And a lot of analysis has shown that much of the plans are quite unsustainable, and that's going to get the attention of these credit rating agencies. We could see in the next month, maybe a little less, maybe a little more, we could see a credit rating agency like Moody's or S&P announce a downgrade of U.S. debt. And that obviously is going to make the Fed's job even more tough as it's trying to lower rates as, its debt is getting downgraded. So there's a lot here to watch. We're going to continue to monitor this. We're going to keep our members updated through our weekly webcasts that we do, our educational webcast, our Trends and Profits webcast. We're also going to be talking about, too, on those webcasts about how a Trump administration is going to really affect the markets, in our opinion, what sectors, what industries are going to do well, which ones may not fare so well. And obviously crypto, as we've talked about in this particular episode, is one of the big winners in our opinion. So all of our members, be sure to stick around for our upcoming webcasts over the next several Tuesdays. We're going to be talking about a lot of that, so be sure to tune into that. Members can go to followthemoney.com/webcast and watch both the latest webcasts we've done, but then also watch all of our archives as well. We have a huge archive of on-demand educational videos for all of our members here at followthemoney.com. I hope you can take advantage of that as a member out there. All right, well, on the other side of this short break, I'll come back with some concluding thoughts on today's episode. All right, friends, welcome back to the final moments of today's broadcast. As we wrap up today's episode, let's just go over a few of the key takeaways from our discussion on Bitcoin and the potential impact of the Trump administration on the crypto landscape, and also the Fed's policy outlook. And we covered a lot today on the episode. Let's pull it all together. So first, we have Bitcoin's recent breakout. As I stand here watching the price of Bitcoin on the chart, it's sitting right at around $75,000. Remember, this is a reaction, of course, to the 2024 election, but it's also signaling to us that these pro-crypto policies that the Trump administration is promising, even hinting at creating a Bitcoin strategic reserve, could really open doors that we've only imagined in the crypto space. And that could potentially drive Bitcoin further into mainstream finance and position the U.S. as a global leader in digital assets. I think this is a positive step for the crypto space if it all materializes. Second, we also looked at the Fed's likely rate cut this Thursday. Markets are betting on a 25 basis point reduction, and they're pricing in a high chance of another cut in December. And as we've said, usually a rate cut means cheaper borrowing, which can stimulate spending, but it comes with some risks because too much easing could bring inflationary pressures right back to the forefront. So the Fed's walking a tightrope here, and its decisions over the next few weeks and the next few months will be critical for anyone invested in the stock market or the crypto market. And then finally, we touched on the U.S. dollar, which has been showing some surprising resilience despite the Fed's anticipated rate cut cycle. That strength, as we mentioned, is partly due to the optimism and expectations around the Trump policies. It's a reminder that in finance, nothing just moves in isolation. Everything is really dependent upon other things. Everything is connected. And sometimes those connections can defy expectations. And that leads us to our primary takeaway is we're in a period where politics and policy and markets and technology and all of these things are intertwining in ways that we haven't seen in a long time. So for those of you who hold Bitcoin or other cryptocurrencies, just remember that this is still a very highly volatile space. The enthusiasm for Bitcoin is strong, but there's going to be bumps along the way. And we expect brand new record highs to be continuing in Bitcoin throughout the remainder of this year and well into next year. We also expect stocks to also do well into the closing weeks of this year and to have another great year in 2025, albeit there'll be certain winners by sector. And we'll be talking about those on some of our upcoming live webcasts here for members. As always, I'd love to hear from you. If you have questions or comments or topics that you'd like for us to explore in future episodes, please reach out to us. We'd love to hear from our listeners. Your input helps shape this show, and I love to address what's most important to you on these episodes. I'll leave you with a wise reminder from an economist, John Maynard Keynes, of yesteryear. He said, "Markets can remain irrational longer than you can remain solvent." I don't agree with everything that Keynes had to say, but I have to give him that one. That is definitely true. Markets can definitely remain irrational longer than you can remain solvent. And in these times of change that we live in, it's easy to get caught up in the excitement, but staying disciplined and managing risk, those things remain essential. And I encourage you to keep that in mind as you navigate these interesting times. Thanks again for joining me on today's episode of the Follow the Money podcast. Until next time, remember, when you want the truth about the global economy, just follow the money. Have a safe and prosperous week, and I'll see you right back here next time. Until then, God bless.
Contained on the Follow the Money podcast is strictly for informational and educational purposes. It should not be construed as specific investment advice. The views and opinions of our guests and sponsors, including Tom Cloud, are their own and do not necessarily represent the views of FTMDaily.com or Robinson Media Group, LLC. Jerry Robinson does hold an insurance license and at times may offer consulting on life insurance and fixed retirement income products. Follow-up, individualized responses to email or phone requests that involve the rendering of personalized investment advice for compensation will not be made absent compliance with state investment advisor registration requirements or an applicable exemption or exclusion and applicable insurance regulations. Past performance is not indicative of future results. You should be aware of the real risk of loss in following any strategy or investment discussed on the podcast. Remember, never do your financial planning through podcast or radio. It's your money. Be wise. Do your due diligence and always consult a trusted financial professional before making any